Well, thanks for jumping in, guys. Anyway, so Alessandro, just to re-break some of these down for you. What we had is the gold. I mean, just to recap on this trade that took earlier on today, with the long off the 1 hour 20. At the moment, we're consolidating. So I'm sure with the Trump and China war and other factors, we'll see further upside. But if another pullback will certainly be welcome. And the down, just to break that down, I was waiting for was the rejection of the 26,000 handle, which lined up with the daily 200, and the obvious sort of support at the round number. And as you can see from history, has rejected that price zone, but it just smashed on through. Even on the lower time frames, there's no sign of slowing down. So didn't make it in. Now waiting for a sign of reversal before sort of getting any longs in there. I don't like to short it, not until we get these crossed over and we see a daily rejection of the 20. So I'll be patient with that one. We have identified a couple of trades that look good to go. One is the euro yen. As you can see on this daily candle, we've got perfect low test and sort of bullish candle. I expect it probably end up being an engulfing one. As I pointed out on the typical IBOs, what we want to look for is this break and retest of the 1 hour 50. Let me see if there's anything I can do for sound. Perfect. Glad it's back. So what we're getting is the break now. I want to see it head up to around 119 spot 4, let's say, and I want to see it pull back to 1 hour 50 for it to push on up. This 1 hour 200 lines up with the 4 hour 50 as well, which would be the target, which is here. So as you can see, a nice move. I'm not looking to push it any further. I will be out at that point, and I will also be, if I'll wait for a break. If it breaks and retests the 4 hour 50 and continues up, great. Otherwise, be looking for that. But that's a good sort of 100 odd pips. You know, we get this move up to 1 hour 50. We're looking at 150 pips total. 118.7. Well, just under that. But it's going to be a nice trade. So I've marked that one's green. It's good to go, and we'll keep an eye on that this evening and tomorrow in case that we get that pullback. The other one is NZD USD. It's not something that I will probably take, but we had a rejection from the key support area, and if you see now, we've had the low test. Now we're getting a nice bullish candle. We've had the break start above the 1 hour 50, so again looking for a sort of pull up to around this handle and pull back down, retest that 1 hour 50 and take it back up to the 4 hour 50. So that 1 hour sort of pull up and retest will probably line up somewhere around this 4 hour 20. But let's see, if it just rejects that and smashes back through, then obviously that's going to be a sign not to take it. We want the time frames to line up, but I'll be quite confident in this being that it's turning around, getting a nice bit of momentum. So that also is a nice green one. We've had a look through some other pairs and not seen anything of interest. And I was also explaining about the yen, of why you tend to see sort of bullish momentum in the yen just because of the holiday seasons, and from my experience being in the retail forex side of things like that as well. We just tend to get people like the havens. So from a company point of view, yen and gold are seen as the havens, and if you think about holiday season, everyone's converting their pounds to other things like the euro, so the euro gets a lot of strength in sort of July and August, and then people just, from the company point of view, hedge by sort of putting their money into the safe havens to keep as much value as they can, rather than being held through the fluctuations. So that's why you tend to see that happen. Yeah, the central bank is speaking. You're right, we've got the rate announcement, I believe, haven't we? Today we've had the employment changes, Aussie cash rate and rate statement, and yeah, rate statement, monetary policy statement on Wednesday for New Zealand dollar. So yeah, keep an eye on those. But you know, this trade would be done within a day. You know, it's not something you're looking to hold. We might get a pullback up to somewhere around here, something that's probably line up with the fibs as well, and probably just carry on back down. Depending on what the news is. If it's good news, then great. We may we may get some continuation. But either way, we're just going to be in it for that time. So it's not one. I will be watching Euro Yen more intently than the New Zealand dollar trade. That and gold, as always. Now, I'd love to see some kind of reversal. I mean, if this recovers back up above here, then I may look to take a trade long from there. But yeah, I just can't see it happening at the moment. Gold would ideally like another pullback to the 1 hour 20. Although, you know, if it's just going to be moving a bit sideways, we might not get the momentum. It may slip a bit further to the 1 hour 50. So keep an eye on the sort of 30-minute and even 5 minutes just to see what it does. So is there anything any of you guys have identified out there? Anything to look at? I know, Kevin, where you are, about you, Sandra, have you seen anything else out there? Okay. Yeah. I mean, you know, well identified. There's really nothing else out there in the markets. You know, it's all well and good. You know, I like to look for reversals. I just don't see any sign of it. I mean, there is sort of signs of a pullback, but I mean, like New Zealand dollar yen, for example, we're starting to get a bit of a pull up. We go on to the daily time frames. I mean, we're getting a low test. So the yen possibly. Let's have a look at CAD. CAD's the same. New Zealand dollar chuff, not so much. But perhaps again, some of the crosses for sure. Yeah, I mean, maybe we will see a bit of a recovery in New Zealand dollar. Whether it's long term or not, we don't know. But it's good to stick, you know, to trading in the way of the trend, as it were. So, you know, if we see this crossover, great. That's where we want to be trading to the upside at that point. You know, you could be trading up to here, and it just be rejected and carrying on down until we get those smaller EMAs crossing the higher ones and sort of confirmation that there is a trend change. That's when we then look for pullbacks and to be going in the same direction. The pound yen, just to touch on that one, you know, just want to see a little bit of a break to the upside or to the downside. Excuse me. And then we can look to make our moves. But yeah, I mean, on this daily we get a slow test, but the trend line's sort of been broken on here, but it does differ on my platform. So don't, you know, wait again for signs of the reversal. If not, we'll probably slump lower, retest 129 and carry on south. As you can see from here, and it'll probably be back down to this 119 to 120 level that gets tested. So keep your eyes on where it finishes up. Keep an eye on all of it. Anything else, you guys? Yeah, so on the lower time frame, not so much of gold, but generally, you know, we haven't really had a pull to the upside to see it break. But yeah, I mean, you know, you got in short here and kept it holding until it exited, until the 7 crossed back over, then you know, you'd be looking pretty good. Those highs, where are they? 2, 3, 5. You know, you'd be about 600 pips up in the last week, just from following that strategy. But yeah, it's nice to see when you get it above, and then the 20 cross over the 50. It's all about waiting for that confirmation, and making sure you're trading in the right direction. I want to see some kind of reversal, but yeah, not going to have much chance thanks to today. It would have been a trade to go short from here earlier. Even here, that was just this morning though, so there's been plenty of rejections. Yeah, it could have been an option, but I was watching the Dow over the DAX and the FTSE, but they've all suffered. Anyone seen anything else? I mean, it is pretty quiet out there, I must say, so there's not much else to report. Do I think Trump will do anything? Probably, or he will probably say or threaten to do something. The bigger threat to the dollar is that, to counteract the Chinese yuan sort of dropping, they may look to reduce their rates. So therefore, if they do that, that's going to have a negative effect on the dollar and create further downside. It just depends on who's going to sort of back off first, but everything is being widely manipulated to suit. So, you know, I mean, the yuan has never been down as much as it has been. I mean, if let's look to get the dollar. So if you look at that, I mean, I doubt very much that it's going to be anywhere near as high, but we'll see. We'll see. But what it means in terms of trades is that the Chinese will do far less trade and physical movements of stock, etc., because of the exchange rate. You know, they want it to be a happy medium. They want it to be a a place where the yuan has some value, and at these levels it really doesn't. Well, it does, but far less. They're getting far less dollars for their currency. So I wonder what will happen. May just continue, but may be a case that to keep trade happy, etc., that the US do cut rates to counteract it. But yeah, I don't see him doing or making any decisions that's going to make it any better. That's for sure. Hopefully they surprise me. Have a look at Bitcoin. Again, seems to be getting used as a bit of a safe haven. Haven't broken out of our channel yet, so you know, until it does, still of a bearish bias. But yeah, I mean, this long-term channel, this is where I think it's going to be interesting to see. But it pretty much did come back down to the 9,000 mark, which was what was expected. So let's really do this. It's probably the best I can get it. 9,100. But yeah, sort of rejected that and moved back to the upside. But you know, we may just see it continue up. I mean, I wonder out of curiosity if we get whether this is on the top of there almost. So there's a little more room to go before it forms a sort of channel within the channel. Let's get rid of this one. Let's see, but yeah, we get a break below there. It's certainly heading back down to some lows. It may just be that it's going to reject this monthly channel once more. So otherwise, guys, not much to report. Not much to report. I think from where we are, Ripple has the most to gain, just because of where we are. You know, we're down the lower end of the chart rather than the top like Bitcoin. So you know, I mean, this has proven really good support. This kind of region. So I was going to be going long anything. It would be better to be going long Ripple, in my opinion, especially if you're a holder. I believe there's a lot more upside potential. You know, I was not seeing any signs of reversals or momentum plays anywhere else. You know, was it just disappearing after where we caught it? Monster trade. Must have been. I wouldn't have left it in for as long as, you know, as seeing where it is now, but craziness regardless. Okay, guys, anything else you want to discuss? No, I don't see anything on the Aussies, I'm afraid. It just, even on the lower time frames, I mean, it just going one way. Aussie yen, I mean, you just got that rejection there. I mean, this could be could could be a short from here, but maybe just to these lows, but not something that's really worth jumping in. I've just not seen on the daily yet any signs of a reversal. See how this day, if this day finishes as some kind of reversal candle, great. Or tomorrow, maybe tomorrow we'll get a bullish engulfing candle, and then we'll get the reversal. But I'm not seeing anything at this moment in time. Aussie dollar, I see some strength on it just because of the weakness of the dollar. So it's probably likely we're going to get a little bit of strength in the Aussie dollar. So maybe tomorrow we're going to see these engulfing candles and the turnarounds for the Aussies. But for this moment in time, not anything that I'm going to be taking a trade in. Is there anything you've seen in the Aussies, Alessandro? Is that what you are? So you think you've got of interest? Gold is really consolidating in this. Yeah. I mean, let's see. See what they bring. But from a technical and analysis point of view, there's nothing I see of interest. Just curious, really, whether gold is consolidating for the next leg up, or whether it's consolidating. Obviously, favour to the upside. But it's just gone awfully quiet. Just building a little block. Okay. Well, how has your trading been going, guys? Anyone want to post anything in there that they've done, or want to share any experiences, or how you've been progressing? I mean, I can tell from everyone that's involved just how much better they're reading price action in the charts, and seeing some of the same opportunities as me, which is great. Well, we've got a little bit of time. So does anyone want to share anything or comment at all on the community? How you're finding it? Okay, well, that's an interesting one. So, what's the reasons for that, Alessandro? How comes you feel that way with the stop losses? Is it just something in your mind you think it will recover, or? Okay, well that's interesting. I mean, and that the only thing is, so to put some emphasis on the psychology part of trading, in simple terms, without sort of breaking it down and anything directly. But if you're not putting a stop loss, what you're saying is, I am 100% certain that the market is going to go where I think it's going to go. and none of us can be certain. So the only reason that you should put one is to protect yourself and be okay with the fact that it may not go your way, because when things don't, it will really affect your mindset, because you're going to think, I was right with that. And I mean, we've seen it with these wannabe brokers out there that have tried trading with people from other communities' monies, and lost them because they've been margined out and stuff like that. I mean, it's okay to have a bigger risk, but it's very good to have some kind of risk rules. It doesn't have to be 1 or 2%. Maybe it's 5%. But for example, on gold, if I was going to be risking, I was looking at long trade now, then I would want to put my stop below here, because then if it breaks below here and I go long, and then it's going to recover that loss and go further anyway. So there's no real downside to having it stopped out and getting in at a better position. The problem comes when you don't have it and it comes down and comes down and comes down, margins you out, or eats into a hell of a lot of your account, because that might only happen once every now and again. But let's just say it happens a couple of times, let's say 2 out of 10 trades, but what you make on the other trades, because no one's going to get all the other 8 right, let's just say some of them are losses, and in total you're down like 20%. You've got to look at the end of the month where you are, and without setting things like a stop loss, it can really affect it. I mean, you could be more happy with the risk of putting your stop below here, below the low, so that's actually like 120 pips stop, and reducing your lot sizes, or maybe not, but then being okay with the fact that, if it breaks below there, it's going further down, and so I'm happy with those swings. I mean, just to break down the example of the gold, let's say you went long at 1430, and you've held it down to 1400. At that point, you were negative. If you do it the way I do, that would have been sort of 30%. Yeah, it wouldn't have been margin called, but you could have got in short on the short trades. You could have made money on that way down if you were stopped out, and it was psychologically and systematically said, okay, you've got it wrong, it's going down, not up, now look for shorts. Or if you got shorted out at that point, you would be able to go long. I mean, because with that kind of a drop, I'm going to assume that you couldn't have got into any other trades or got back into it. So you've literally had to hold on for the whole time, plus the charges and stuff like that. I mean, there's always pros and cons for every style of trading, but wherever your stop is, I would just always recommend having something there, because like I say, otherwise you are just telling yourself that you're always going to be right, and then when it goes wider than you like, it's going to just systematically and logically just spring into your mind, crap, and you're going to panic just because you've told yourself by not having a stop that you're going to be right. And that can't happen every time, so it's going to be far more damaging than to just accept risk and accept the level that it gets stopped out. And then let's just say you had a stop, even if you had a generous stop and it was, I don't know, 50 pips or 100 pips, whatever it is. Once you saw this reversal, on the lower time frames, which happened perfectly, was I think it was the 4 hour actually. You could have gone back long at that point. Yeah, we had the 4 hour 200, and the obvious support at 1400. You had this doji candle. Even if you got back in here, you still would have protected yourself and made more money. And that's what it's about. It's not about being right and wrong. It is just about what you make and being consistent. And if you don't have stops in, because the market doesn't move consistently, you're never going to have consistency. It's really difficult without rules in place to build a real strategy, because otherwise you're just doing toss of the coin. At any one point, without any data, without any information, without any knowledge, you've got a 50% chance of being right. Just by going long or short right now, it's 50-50. But by adding multi-time frame analysis, by adding some fundamentals, by adding some other analysis and other things, we can give ourselves an edge. And that's why, you know, the edge would be, actually, after all my analysis, I think I've got a better chance of going long than going short. And so you go long, but you set your parameters. So if it breaks below, that's it. You accept that you're wrong, and you know, you look for the next chance. It doesn't mean you're wrong overall, but it's just the price that you get in. You know, there's no harm in getting in at a better price, and that's why I have sort of a tight stop, because in my view, let's just say I went long here and I put my stop at 14.55. Let's just say, for argument's sake, just below the 1 hour 20. If it gets stopped out, which is possible, then it's probably going to carry on going. And then I'm going to buy back in here. And then if I had the same target of 14.70, yes, I lost 2% there. But when I've gone long from here, I've made up my 2% here, and then gained the other 20% there anyway. So it doesn't matter. That small loss is just consequential. That is just part of the strategy. And sometimes I do use a smaller lot to sort of test the water. So, you know, I might use 5 lots just to see if I've got the right idea going long or short. And then as it reverses, or if it carries on going, then I might look to increase it to 10 at that point. So, you know, there is method to the madness, and you may get stops. But hey ho, you know, that it's, in my opinion, and you know, from years of trading, it's important to have it from a mental point of view, to accept that it can't always be right. And if you're not punished monetarily, you don't learn. Well, I didn't anyway, to put it that way. But here is another example. Let's say you went long up here, and you had your stop below here. If it broke it, okay, fine. You know, look for the re-entry long. Or even if you got back in here, you've lost 2%, but you're going to make it back and more on the trade. I mean, does that make sense? Does that help? I mean, like I say, I appreciate it. It's probably just it is a mental thing. There's no probably about it. It is a psychology thing as to why you don't want to have the stop. But even if you're having it wider and using a smaller lot size, and not giving yourself too much damage to the account, you know, that 1% or whatever rule is there for a reason, and it can be that maybe using too high lot sizes or something, or maybe you just accept that risk. But as you grow and build your account, you will not want to see those swings happening without a stop loss when you've got a lot. You know, let's just say you've got 10 grand account, and that swing down, it looks like 3,000 or 4,000 that you're down. Instead of it being a few hundred, it's thousands. And then you're going to panic, and you're going to come out because you're thinking, oh, it might carry on going lower, and you're going to cost yourself even more money. So the bigger your account gets, the more the monetary and the psychology side comes into play, which is why it's good to set the rules early on, so that you know you accept that percentage loss from that point. Yeah, it's all about confidence. You know, I mean, yeah, there is putting it too tight. I would never put a stop less than 20 pips. And with the volatility in the markets out there, I have been doing a lot more than that. You know, that has just been a given. But you know, it's a case of, like earlier on, for example, my stop was below 14.50. Because I thought if it does break down, it might come to there and push back up. But you know, it's still 2 to 1. I'm still targeting 100 pips. So it's still 2 to 1. You've just got to keep everything relative, and that's the trick to it. But you know, you're only going to learn by doing, unfortunately. And when it's money, it's not a nice lesson when money is lost. But that's why, as I say, it's better to do that earlier on than later on when it's a bigger account and bigger funds. I mean, including myself. I know people that have gone from very, very small numbers to very big numbers and lost it all. This is the trading journey that a lot of professional traders and successful traders take, because they do find that they're punished big time before they sort of crack it, as it were. So it's just, sometimes if you can learn from others' mistakes like mine, then I'm happy with that. I'd be glad to know that you guys are doing everything right and learning from my mistakes rather than making your own and keeping money in your pot to be able to trade with. That's the name of the game. But hopefully that little psychological breakdown is helpful in any case. Now, is there anything else you guys want to... Yeah, so regards to withdrawals, every month. So what I do is every month that I'm above my initial investment, I take it out. So my 10 to 20% I make every month, I take that out. I don't compound it. How my personal setup is, I'm fortunate with my other businesses and everything that they give me quite considerable income, and therefore I try and keep, because I'm spread betting for tax purposes, I try and keep that number the same. If I go over it, then it becomes taxable. The spread betting is tax free in the UK, as long as it doesn't exceed your main income or it's your only income. So there's benefits to doing so. But yeah, I take the money out every single month. My plan is to actually start trading with a larger account and letting it compound. But one of my companies is in the process of going public, and we've got a lot of other things going on, which means that I would like to keep taking the money out and using that as income and using that as the money that I spend on a monthly basis. But hopefully for next year, be in a position where I can just leave it and compound it. Yeah, so with spread betting, it is tax free unless it's more than your main income, and then you get taxed on the difference, and it just goes up and up. And also, as long as it's not your only income. So, for example, if you earn 10 grand a month from your other work or whatever, you can earn up to 10 grand a month from spread betting without paying any tax on it. So I do everything strategically to keep everything lined up in that sense. But yeah, if you're going to CFDs, if you're CFD trading, that's all taxable. You've got to pay capital gains on the difference. Same as, I believe that's the same in every country, and it's not, most countries don't actually have access to spread betting. But yeah, in the UK, spread betting is the way to do it. That's why I say I don't use leverage, I don't get any of that, and I have to trade with a larger account than I used to be able to earn the same. But that's just the way of the world. But yeah, it is certainly tax efficient to spread bet. No, I wouldn't recommend doing it. It doesn't work for a company. If you're a company, you'll get advised to use CFDs and pay difference. You're absolutely best off doing it personally. If you did it for a company, there's got to be a way of it. I mean, I'll have a think. I used to be a financial advisor and tax planner for my sins, so as my other companies are financial, so that's why I have the knowledge on it. There probably is some kind of way of doing it, and I'm not advising in any way, shape or form. I'm just talking from my personal experiences. But with a company, it makes it incredibly difficult to make it beneficial. You're better off in paying yourself the dividends, paying the corporation tax anyway, paying the dividend tax personally, and then knowing that from there on you're going to be tax free. Would would be what I would do in that situation. But yeah, you know, that way you're always just going to have the 19% corporation tax. I mean, same as you would do, and we're just expecting to anyway. But at least then you've got it in your personal account to personally benefit from. Would probably be the better way in the long run. Yeah, if you're thinking of trading full time, then I would definitely say, you know, speak to your advisor and you know, your accountant. But I would definitely say that from my personal experiences, you would be better off if you've got the money in a company to just do the dividend payment and then pay the personal tax on the dividend number that you transfer out, and then just set up a personal account. Once again, I'm not advising. I'm just talking from my experiences. As I say, speak to an advisor who will likely confirm. Okay. Well, guys, we may have one final look at anything before I wrap up. Okay, great stuff. Well, you know, as always, if you need me, feel free to contact me directly or put something in the group, or share anything you're looking at. I will try and keep active on the group in telling people what I see and analysing the markets. But otherwise, thanks for tuning in, and I will see you again next week and speak to you beforehand. Have a good evening and good week, guys, and keep an eye on those Euro Yen trades.